Hello, everyone. My name's Drew Dosek, and welcome to Trading the Close. What a nasty day on Wall Street today. We saw stocks dropping, basically gapping lower tremendously, and that's back on the news from tariffs that were given out by Donald Trump yesterday afternoon. 10% tariffs across the board, basically on all other countries. Other countries receiving higher tariffs, especially China, which now amounts to 60+% of tariffs added on this year. I anticipate a lot of negotiating going on in the near future, but let's just jump into the data, right into the charts, and I'll show you what I'm looking at. All right, so first up, we've got right here on the heat map, you can see that on the left-hand side of the screen, we've got the Dow Jones down 2.9%, NASDAQ down 5.77%, S&P down not as much, only 2.6%. Oil got smacked today, down 5.5%. Gold down 0.87%, staying relatively flat. Bitcoin, the same thing, right around 82,000 bucks. And so what I want to show you, though, you can see on the heat map on the right-hand side of the screen, but I want to jump into a broader heat map of the S&P 500. And so I click right here. Look at this blanket of red that you see. Massive amount of selling across the board. I'm highlighting here Apple. Look at this, down almost 10% on the day. When's the last time you've seen Apple down that much? Incredible selling pressure on big companies like Amazon, Nvidia, Apple, Google, Microsoft. I'm going to get into why Microsoft's not down as much here in a little bit, but then also you see some green on the screen. These are defensive plays, and I'm not talking about companies like Lockheed Martin. I'm talking about companies like T-Mobile, Verizon, AT&T, Philip Morris, Procter and Gamble. You can better believe, even in a down market and even a potential recession, people aren't giving up their cell phones. We've got too much data on our cell phones. We utilize them every day for much of what we do, whether it's planning, calling, texting, social media, trading, you name it. It's on our cell phone. So the likelihood that money's flowing in there right now makes sense, but that's not going to last forever. And I'll get into that later also. All right, so we jump into the S&P 500. This is the spiders. Notice what happened here. I've been highlighting this parallel, and price action closed yesterday up here in the 564 area and then broke down underneath this parallel. What we call that here is river theory. Notice how this would have been support for price action, but price action opened lower than the support and continued lower. It continued selling down even through the end of the day through this trend line. So I'm going to zoom back out on the chart and show you the next levels of support. Right now, we're actually into a level of support. Potentially, there could be a little bit of reprieve tomorrow. We'll see, though, because I still think there's more selling pressure to go. We do have major support on the S&P 500 down here at 524.61, and that's derived right here from this pivot high. You see how it's caught support on this first test right here and bounced up, pierced it on the August 5th low and bounced again. So this area is going to be good support for the S&P 500. All right, next up onto Bitcoin. Bitcoin also risk asset, so it makes sense. This is selling off too. We see price action coming down here, but I want to bring your attention to yesterday. Notice how I said the $87,000 area was going to be resistance, and then we could almost test that trend line, but I didn't think we were going to get there because of the steepness of that trend line. And sure enough, boom, selling pressure right back down. This is a bear flag pattern, all coinciding with what I think the target is, $72,000 to $74,000 on Bitcoin in the near term. Next up, gold. Gold also tested a trend line right here, but it also tested the inclining parallel. And I mentioned to you before, we confirmed above. So price action coming down, testing it makes sense because this is now support. Now we can hit support, and that eventually will break the more often it does get hit. So keep that in mind when you're evaluating gold and the potential for it further in the near trading days. Next up, silver got smacked like oil. Geez, look at this drop on silver. Now, silver has more of an industrial component to it. So whenever the economy is doing well, silver's got a good chance to go up. And when the economy likely is going to start contracting, silver can get beaten down, just like what we see on the chart today. Next area of support on silver is going to be $30.97. Then this inclining trend line right around $30.50 on the chart. Next up, we have the US dollar. And man, the US dollar really got destroyed here again today too. But look at the power of trend line analysis. If I scroll back out on the charts, you can see this pivot low connected to this pivot low. And then right here, we had support with the dollar coming down through the day and then now closing up above this trend line. So right now, this trend line is still support for the US dollar. The US dollar has a chance to go a little bit higher. And one thing that's really conflicting with the tariffs and the market is hurting because of it. The plan was for these tariffs to be imposed and the dollar was going to go up with strength, offsetting some of the hurt that the US citizens would experience with inflation. So far, that's not the case. The dollar is getting hammered down here. So if we do see a bounce, which we are closing the day right here, next resistance is going to be 103.24. But major support, should selling pressure on the dollar continue, is going to be down here at $100.38. On to oil, which just destroyed today. And you can see right here on the chart, we were talking about this yesterday, trading basically in no man's land in this wedge. And then since, kaboom, right down, getting into support right here with all this chop. Amazing move on oil. When oil is going down, the likelihood of not necessarily a recession, but just harder economic times is evident. When everybody's going on vacation, when we're ready to go out of town during the summer, when school's out, oil and gas prices typically go up because people are looking to spend money and travel. That's not the case as we see right here. Oil is going down, showing you that there could be harder times ahead of us. Natural gas, really not much to report here, but still showing the chart how different it is from oil. Look at this, all consolidating right here, immature bull flag pattern that we see there on the charts. Next up, we've got Microsoft. Now, this is extremely important. Notice the difference between Microsoft's chart and the S&P 500's chart. S&P 500's chart today gapped underneath its parallel, but this did not. Notice here, too, this says BT. This is a bottoming tail on the daily chart of Microsoft. So I knew coming into the day, I was interested in playing this for a long play. This was an amazing opportunity. Price action, gap lower as we see it, closed here, came down in, and the best way to play bottoming tails is to buy around the 50% retrace for a bounce. And that's not a long-term bounce, that's a near-term play, more or less like a day trade option. But you can see here, price today got as low as 369.35. Eclipsing the 75% retrace, but it didn't collapse down underneath this area. This area is now support and has been support with this parallel, but the bottoming tail also enhances that support for Microsoft. And also, if Microsoft and the markets continue to sell off and say consolidate in this area will be support right here at 349.67. And that comes all the way back to some pivots that occurred back in November of 2021. You can see it right here on the chart. And the 200 weekly simple moving average is right here at 334.94. So this would be a fantastic buying zone for a long on Microsoft should and if price gets down there on the charts. Next up, Apple. Now, Apple had a lot of pressure on it today. There's several reasons, one of which a lot of their components and phones are made in China. With the tariffs hitting China, one of the hardest countries hit, you can see investors are not too pleased with that. That's going to hurt margins for phones and sales going forward. But this was to be expected. And what you'll say, Drew, what do you mean by that? Well, you can see these things in the charts. Our technical analysis helps guide you to find these levels. And I'm going to show you exactly what I'm talking about. Right here on the charts, what do we have here? Here's a left shoulder, a head, and a right shoulder. This yellow trend line is the neckline of that head and shoulders pattern. The measured move for that head and shoulders pattern is down here at 197.40. So Apple may not be done selling. Right here would be a great buying opportunity. And that these measured moves don't mean that's the floor. The measured moves mean that it's a target for the movement of selling that should occur off of this pattern that developed on the chart. So even if you want to start inching in here or inching in here and a little bit beneath, that would be a proper strategy in trying to play Apple for a technical bounce. You can see here on this trend line, just broke and smashed right through that trend line. Incredible move on Apple today. The sentiment is not good for it in the near term. All right, on to stocks that actually performed decently today. T-Mobile, as I highlighted before, people aren't going to throw away their phones. They're, especially during a downturn in the recession, that may be one of the last things people decide to let go of if they're under economic stress. So right here on the charts, you can see here another technical factor, a daily topping tail. I talked about the bottoming tail on Microsoft, but this topping tail said that we were going to have selling pressure in the near term on T-Mobile, which did transpire. But today was one of those stocks that went up on the day. Notice this is bullish consolidation, so there could still be a chance that we go a little bit higher on the charts, but notice this negative divergence that's going on the RSI. That tells me it does not have a lot of room to run. Now, one thing to keep in mind with defensive plays, most institutions have to put capital in the market. They can't just sit on the sidelines. So plays like this are where they go to for safety. It's like a shelter for their capital, but that doesn't last forever. It can be near-term gains when markets are in turmoil, waiting for the opportunity, like for Apple, to get down to a great buying level to redeploy that capital back into those growth stocks. So on to Procter and Gamble, another stock that did see a nice update, and even notice this gap up too. It gapped up near 175, a fantastic move up when the markets were collapsing. So a lot of people started thinking the same way that I just described. This is an area for safety. But again, I don't think this is going to be an area for safety for the long term, because here we have all-time highs. I don't foresee PG making new all-time highs in the near term. At very best, I think we can get back up to these pivots right here, which is right around $180. But if selling pressure commences even further on Procter and Gamble, this support trend line right here at 167.88 is going to be support, followed by major support down here on the bottom end of this parallel channel at $160.47. All right, so that wraps up the details that I want to bring you today on trading the close. There's so many charts moving. Today in our live day trading room, I think we had 10 to 15 live day trades. It was awesome, lots of fun. I hope to see you guys there sometime in the near future. My name's Drew Dosek. Thanks so much for watching Trading the Close. I look forward to bringing you guys some more information and details next week, when we should have a lot more data to go through. More news on tariffs. I'll be keeping my ears open for it. You guys have a great day.